Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The information shared here is for educational purposes only and is not a recommendation to trade.
Hello traders, thanks for joining me. It is 7:47 a.m. Chicago time on the 24th of October 2025. This is episode number 2706. Let's just take a look at what's going on here. Of course, the big news today is CPI. We're going to just jump right into the Convergent Trading pre-market summary sheet. How's everybody doing? How was your week? Very, very, very busy week this week. I had to take the day off yesterday just to get a breather. So we went from kind of a sideways market to an explosive move higher across the U.S. indices on CPI. CPI year on year came in at 3% versus 3.1%, and a core came in at 0.2% versus 0.3%. Better than expected. UK retail sales higher than expected. German and EU PMIs higher than expected. So it's all wine and roses with the market right now. The U.S. government shutdown continues. I wasn't sure if we're going to get the U.S. CPI. Some calendars had it as tentative. Some were sure. And here it is. We still have a couple more numbers today. But overall, glad this one is out of the way. It's a big one. The White House confirmed on Thursday that U.S. President Trump will meet Chinese President Xi next week during his Asia trip. Remember, we're looking to avoid a 155% tariff on China starting November 1st is the latest jolt that we have. And then in addition to that, Trump has decided to terminate negotiations with Canada effective immediately because of a video of Reagan that came out or something like that. I don't know. Just a reality TV show. U.S.-China meetings begin today ahead of Trump's Xi meeting next week. Strong earnings from Ford and Intel. And what we have left today is the global PMI, the S&P Global PMI numbers for composite manufacturing and services. We still have Michigan sentiment final. This is the final number at 10 o'clock. It's not the prelim. Tends to not move as much. And that's that. So we have a mild risk on sentiment. We have pushed through the prior high. We've pushed through the China scene of the crime price at 67.9250. We've taken that back. That was totally expected. In fact, on Wednesday's TraderBite, the expectation was just that we would take it out. We got close, couldn't get it. And so now we're seeing pretty good relative range, but relative volume's pretty light. So for this time of day, the volume versus this time of day's average volume over the last 20 sessions is only at 88% in the S&P, 89% in the NASDAQ. The Russell's in line, pretty poor for the YM. Despite this release, we're just not seeing the volume participation. Now, that volume includes the high volatility we saw after the Chinese tariff news. So that's factoring in. Things are coming into line again. Today, despite the CPI, the S&P has done 162,000 contracts. 162,000 contracts, which is relatively elevated. We expect it to be around 120 to 130,000. The POC or the mode for volume at this point in the session, or actually all the way through until the open, which is another 40 minutes or so, 38 minutes, that is 130,000. So we're above that. The inventory is 100% long, 100% long, expecting some sort of a rebalance here. And then we have a gap this morning, so gap rules apply this morning. The range is quite wide, 60.75 versus the normal, or what we would expect to be common, which is 20 to 25 points at this time of day. So we do have a fair bit of activity. So why am I going through all this, all these details, these statistics? It's simply to characterize what is likely to happen or what to expect as we open. Whether it happens or not is up to the market. It's not up to me, but I know that coming in here, a lot of volume got elevated as a result of CPI, and it immediately stopped, right? We went from our vol, and I posted it on Twitter. Our vol was at 64% in the S&P, 70% in the NASDAQ, 58% in the Russell, and 54% in the Dow. You could see that it popped higher to 89%, 89%, 102%, 68%. So we did get a little bit of a boost, but not all that much. So that's where we are. Crude took a massive push yesterday. I was really surprised to see where it was at. Now, the idea here, again, on Wednesday, I talked about crude popping higher from here, and that it has put in a nice little, a nice excess low. The lower low put in an excess low and a nice rounded bottom, and it looked like it was heading for 58. As I said, I was off yesterday. When I looked at doing my homework in the evening, I was like, wow, we're at 60, 61. That's pretty nuts. So that's kind of interesting. Here's what I talked about. On Wednesday. Let's switch this to the recap screen so it can be cleaned up a little bit. So this is the freeze frame from the YouTube video. So this is YouTube right here. And it's showing you the primary expectation on what's happening. So the primary expectation on Wednesday was that we would likely pull back a tad into the 67, 70, 67, 65, and then make a run at that 67, 92, 50, take out the SOC, which brings us back into, and having recovered the entire sell-off from China from October 10th. And the idea here is we're likely to push through the 6,800, get up into the 6,810 before we wait for the next leg. The secondary was a lick check above, a liquidity check or a poke above the overnight high in the prior session's high into the 67, 88, 89 area, possibly going into the 92.50, finding sellers, and then dropping back into the range, getting the prior settle stat, and then extending down into the 67, 55, potentially 67.50 area. Here's what we've got. Here's what we did in the S&P. So this was the day in question here. This was Tuesday. Wednesday we opened. We had nothing on the upside. It basically displayed somewhat of an open drive behavior. The open drive was negated a little bit because the market ended up, instead of driving and continuing, it ended up driving, then coming all the way back, having basically like an 85 to 90% retracement before it tipped over and started to sell off. So we ended up selling off all the way down into the 6,700. We poked the 6,700, put in an excess low, and came back and closed in the center of the range. And you'll notice here that, you know, it closed right there, closed right on top of the point of control. So shifted the point of control from the lower end of the range to the middle of the range. This is quite significant. A continuation or a trend day would not do that. It would close at the extreme, and it would likely move the point of control down into the extreme and hold it down there. And it could not do that. The following session comes in. This was Thursday morning, or the overnight session, Globex for Thursday. The following session comes in and it tests this zone in the 6720. We've played the 6720 so much. We test the 6720 with another excess low. So we have a higher low that is an excess. You could see the candle wick there. Pushes up, holds the VWAP, and then tries to break through, comes all the way back, another higher low, gets into the excess, fills the excess in somewhat, holds a 6720 again, and then we open, poke down, and push right back up into right back to where we sold off from just a few days ago. So we just basically recovered yesterday. All we did is we recovered by bringing the point of control back in line to what we've had here for several days. Point of control, shifted down, came all the way back. And so now we're accepting these prices and clearly rejecting everything below the 6,700. Buyers are in control technically. And then since then, we've just opened and run up. So we had a weak high. Look at that high from yesterday. Pretty weak high. We had a double TPO high with a nice collision at the top. And we brought the point of control to the upper end of the range. That's quite bullish formation. And we ended up walking ourselves through the 67.9250 SOC and holding VWAP here before the spike on the CPI. So the CPI, the expectation on the CPI for me was it created a pretty clean and clear capitulation high or a spike high, sort of a tweezer type of formation, and it set up somewhat of a short trade back to the mid. Might be, yep, still there. So there's the release, there's the trade before the release, there's the release. We push up and you can see very clearly here a capitulation high and then a pullback, and the pullback triggers a short setup. Scales, you can see the Edge Pro line moving up to give us our new theoretical average. And I'm still, the expectation here is that we would tag the mid, and we're just kind of lingering here before the open. We'll see how that plays out. Crude opens in about 2 seconds, but that's the S&P. We'll leave that be for now. So what are we expecting here today? This is quite a spike high that we have here. Let's get back to our planning. This is quite a spike high. So what's the expectation for this morning? We have a 100% inventory. We're opening in a gap, and the expectation is it's likely to go and attack this mid, retest to 6,800, hold steady, and then start to move into the excess high. This is good news, right? Move into the excess high. And I would not be surprised today, given that it's Friday and that we've had this pretty decent run up from 6,700 into the 6,837. I would not be surprised if people are taking profits off the table, especially with this tariff talk going on. So that's the primary scenario. The primary scenario is responsive. The gap remains open. The gap high is yesterday's high all the way down here, expecting this gap to remain open here. And then so an open auction out of range that responds and then pushes up and then holds steady. Not expecting a runner this morning given conditions, given the way this is configured. Really not expecting this thing we're not expecting a runaway train. Now, let's say I'm wrong, right? And we have a response. We balance our inventory overnight. We get back into this nice little zipper structure, which is the LIS zone, or the line in the sand zone. Right in here under 6,800 down into the 67.94 or so. So it's 94 to the double O. And then we have our bounce. We get this impulse higher, and then we shift into a trend. And now we're starting to tackle measured move highs. We push through one. We push this through this measured move high. We push through this measured move high. This is a lower probability play. And we start walking ourselves into the 68.50 before we encounter a response. Okay. Given that it's Friday, it's not likely. Because we are at all-time highs and we are opening in a gap, it gives us scenario 3. Scenario 3 is an open that pushes immediately higher, flushes out late buyers, and then impulses down, fills the gap. We have a weak high, and then comes right back in to the MCV down here in this region. In fact, let's suck in some more volume here so you can see the MCV becomes the key target. Now, the market can move a lot farther, a lot shallower. What these scenarios are supposed to do, the reason I go through this is to know if it does this, then I'm expecting these areas in my price map to be responded to, right? That's what creates our stock zones or our zones here. It doesn't mean that I'm predicting what the market will do. It doesn't mean that I'm covering my bases by having, a buy and a sell and a sideways scenario. That's not the idea. The idea behind these lines is to say, if it does this, then I'm expecting that, and then to be prepared to execute it rather than, I'm long on a pullback. Hang on, let me pull up a chart and see what it might do. I've already done that work. It's just time to execute, right? We don't read, imagine yourself as a soldier heading into a theater, a battle theater. You don't just kind of land and then pull out your briefing and just go, okay, what am I supposed to do? What's the objective? What's the mission? No, the mission is already set. It's time for me now to be here and respond to what I encounter on the ground, which may be very different than what the intelligence services have provided or what the last drone footage or satellite footage has shown, right? And I have to deal with what's there. And if I do, then I know I have a map, and that's what this map is in terms of my price map and my scenarios. I know what reactions or what areas it's likely to test, and if it breaches those areas, I know what's likely to be next. Likely, because it's a game of probabilities, right? So I hope you find that helpful. I'll let you be. I will let you go now. Good luck today, and I will catch you on Monday morning. Keep it light and tight today. It is Friday after CPI. You do not want to go home with a hole in your pocket for the weekend. That's not fun to do. So A+ setups today only, right? Good luck. Cheers.